Hi everybody, Alex Deploy here from Expert Forex, and in this video I want to make you aware of a strategy facility that is on the RSI Envelope EA, and it is in the information table that you can see on your screen at the moment. In the information table there is a plan which reflects the settings that you may currently have in your EA. So it's basically giving you lots of information about the results that you can expect depending on how your transaction goes. So the strategy on your screen right now is a very popular one. It's the double in one trade strategy, and basically it tops up 3 times at various points. It has a following stop that follows the transaction at various points, and it has different lot sizing. Now, as a result of all of that input, what this table is telling us is that if the initial transaction gets stopped out, the loss will be $480. Now, that's roughly 5% of the account. And that's what people that go for doubling of their account normally start with a 5% risk. If you encounter the first top-up, you will make $20 if you are stopped out. So in other words, the transaction has become risk-free, totally risk-free after the first top-up. After the second top-up, it's telling us that this transaction will break even after, if it gets stopped out after the second top-up. So there will then be the initial trade active, the first top-up active, the second top-up active, and if all 3 of those get stopped out, the net result will be 0. Then the third top-up tells us that should all 4 of the transactions be stopped out by the following, then the net result of all 4 of the transactions will be a positive of 40. What it also now tells us, which is the most important information, is that if this transaction is successful, it will double the account, and there you have it. $10,200 will be the net result. So this table here is very important, and you should consult it immediately before you start any live trading or auto trading. Have a look at this table to make sure that it is in line with your trading philosophy. Now, just to point out, this particular strategy is great because it doubles your account, but the big risk is the size of the stops when the top-ups happen. So it starts out with a very small stop, a 12-pip stop, then only a 10-pip stop on the first top-up, a 10-pip stop on the second one, and then a 13-pip stop on the third one. And then after that, price is free to roam to try and hit the target or hit the following stop. So that's the downside of this particular strategy, is that you can double your account, but you've got to work through all of these very small stop areas. But the purpose of this video is to make you aware of this plan that you must consult to make sure that it's in line with your trading philosophy and that you're not risking more than you should. So let's design a slightly less aggressive strategy, maybe risking 2% of the account. Okay, and I'm going to show you how to make those changes. You press F7, it brings up the input screen for your EA, and you make those changes. So I'm going to just put in some figures, and let's see what happens from these figures. So the initial stop loss, I'm going to increase that to 40, make it a little bit bigger. The first top up is going to happen at 35. And I'm going to move the stop to, let's say, about 16. That should give a big lot of room for it to move. And this particular one, I'm going to make 45. Might as well keep that going. And the 45, I'm at a guess 28. I'm going to make it. And then the last top up, I'm going to make 55. So I'm just jumping 10 at a time. We'll go to 55 on that one. The stop there, I've got a number of 37 here, so that looks good. So that's how you make the changes. You literally just go in and make the changes. Now I'm going to make some changes to the lot sizing to make it more conservative. So initial trade, instead of 4, I'm only going to put in half a lot. And over here, instead of 3, I'm going to put in 0.4. And over here, instead of 3, I'm going to put in 0.6. So what we're doing is we're designing a strategy that's a little bit more conservative, more realistic to, let's say, normal trading. It's nice to go for double your account in one trade type of trades, but it doesn't always work. So let's have a look at what's happened here. Is we have now topped up at 35, 45, and 55. But now look at our stop sizes. We're starting with a nice big stop, and we've got nice big stops compared to the previous ones, which were about 10 on average. Now we've almost doubled our stops. We've got more, and we're losing on the first trade 2% of the account. Remember, the account is 10,000, so only 2% is being risked. But the minute the first top up happens, the rest of the account is risk free. So you're going to be stopped out at a small profit, but which means it's basically risk free from then on. Okay, so now it hits the target. Now the target doesn't double your account anymore. It's now a 1,450, which is 14% increase on your account. So it's not a shabby increase, 14% increase, but at least you've given the transaction lots of room with nice bigger stop sizes. So those are the kind of considerations that you can do, and your variables are obviously when you add your top-ups, when you add your stop losses, and your lot sizing. You can vary your lot sizing, and by varying those 3 elements, you can design your own strategy, and you can, if your strategy looks out of whack, you can fix it by changing those particular figures. Now, there is no formula for it. You have to do it by trial and error. That's the way you do it, and you've just seen how I do it. You press F7, it brings up the input screen, and then you change the values that you think should be changed to improve the results on over here. It is a trial and error thing, and the more you do it, the better you'll become. So as I say, this video was just to make you aware of this valuable tool that will firstly warn you if you're exposing yourself to too much risk, because it gives you loss at each level of top up, and it gives you the overall return. So you can also see what your risk return ratio is. In this particular case, we're risking 2% to make 14%. It's a fantastic risk return ratio, and it's risk free after the first top up. So and we've got plenty of room. So you know, if you compare the first double your account in one day strategy to this strategy, I would prefer this strategy because it gives you more chance of success. You'd most probably get 5 to 10 times more successes with this strategy than with the double in a day strategy, where the stops were so small. And that's why we actually created this EA, so that you've got this total flexibility here to change the levels of top-ups, to change the stop loss percentages, and also to fool around with your lot sizing so that you can influence the outcome of your strategy using those 3 main variables. So from me, Alex Deploy, I hope you enjoy this EA. It really is a fun EA which puts you totally in charge and in control of the exit strategies. Again, from me, Alex Deploy, cheerio.